Good morning, everyone. Welcome to another episode of Capital Markets Quickie. I'm your host, Endrit Cela, here to give you the quick lowdown on yesterday's market action and what it means for you. So, let's dive right in. Yesterday, the stock market took a slight dip as anticipation built around Nvidia's earnings and the Federal Reserve's latest meeting minutes. The Standard & Poor's 500 edged down just over 0.1%, while the Dow Jones Industrial Average saw a modest decline of 40 points. But the real story was the Nasdaq Composite, which led the way lower with a 0.6% drop, continuing its descent from Tuesday. Now, Nvidia has been the name on everyone's lips, especially after its shares took a 4% hit on Tuesday, their worst day since mid-October. With expectations sky high for the chipmaker's fourth quarter results, all eyes were on how it would perform, not just as a gauge for the AI sector, but as a potential pivot point for the stock market at large. Adding to the drama, Nvidia's shares fell another 3% ahead of its earnings announcement. The pressure was definitely on, considering Nvidia's role among the Magnificent Seven megacaps that have driven much of the market's recent rally. But it wasn't just Nvidia making headlines. Palo Alto Networks saw its shares plummet over 25% after slashing its annual revenue forecast, sparking concerns over tech spending. And in a significant shakeup, Walgreens dropped out of the blue-chip Dow index, making room for Amazon. These shifts highlight the ongoing adjustments within key sectors and how they reflect broader market sentiments. Meanwhile, the Federal Reserve's January meeting minutes delivered a clear message: patience. Most officials emphasized the risks of easing interest rates too swiftly, aligning with Fed Chair Jerome Powell's cautious approach. This stance puts a damper on hopes for a rate cut as soon as June, with recent data adding to the uncertainty. So, what does all this mean for investors? Well, it's a reminder of the tightrope walk between optimism for growth and the reality of economic indicators. Nvidia's earnings and the Fed's minutes serve as critical touchpoints for assessing market health and investor confidence. And speaking of Nvidia's earnings, I'll be touching on those in tomorrow's podcast after having digested the results a bit better. But one thing is for sure, we have a lot to talk about after last night's results. So, that's it for today's episode of Capital Markets Quickie. I'll catch you all tomorrow morning with a brand new episode. Have a great day, everyone. Cheerio!